Hey Bowtie Nation, Joseph Hogue here with the Let's Talk Money channel, and I wanted to do a quick update video for you as something we've been seeing a lot lately in the stock market could be a huge opportunity very soon. A bill passed the Senate in May that would force shares of Chinese stocks to be delisted from the US exchanges, and lawmakers on both sides of the aisle are supporting this. But it's not just shares of Chinese companies that are in danger of being delisted here, and you need to know what happens when a stock gets delisted. What happens to your money? How do you sell that delisted stock? And is it actually an opportunity to make money? In this video, I'll show you what it means to be listed on the stock exchanges, as well as the hidden dangers of smaller markets. I'll reveal why a stock gets delisted, as well as the pros and the cons. Then I'll show you how this might actually be a good thing for investors and how to take advantage of it. We're going to get to it, but I've got to give a shout out to all you out there in the Bowtie Nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Nation, when a company wants to sell shares on a stock market, it goes through a long process of forms, disclosures, and accounting audits. Now understand here, I'm talking about selling stocks on the major exchanges like the New York Stock Exchange or the Nasdaq. There are fewer requirements on the so-called over-the-counter exchanges, but we'll get into that in a little bit. But if a company does all this and meets some listing requirements like a certain number of shares available, a share price that starts at $4 or higher and then stays above $1, and they maintain a certain amount of interest in volume for the shares, if it meets these requirements, then it can have its shares available to investors on the exchange. And getting listed on an exchange not only means easier funding for a company, but also prestige and greater potential for partnerships or acquisitions from other companies. But rainbows don't last forever, and a company can get delisted from an exchange if it doesn't meet certain rules. Now, a company can get delisted if its share price falls below $1 for an extended period, if investor interest in the volume of shares traded daily drops below that threshold, or if a company fails to file one of its annual reports on time. When this happens, the company will receive a delisting notification like this one for Accenture Biopharma when its share price fell below $1 for 30 days. Now, those are the technical and more frequent reasons a stock is delisted. It's totally unrelated to what we're seeing right now with those that move to delist the Chinese stocks. In that, it's because Chinese companies aren't held to the same standards of financial auditing that are required for listed companies, specifically the accounting standards set up by the PCAOB here in the United States. Basically, Congress is saying if your companies can't comply with our accounting regulations and oversight, then your stocks shouldn't be in front of our investors on the exchanges. When a company does get a delisting notice, the exchanges usually give them between 3 to 6 months to correct the problem, and some of these are really easy to fix. Companies fall behind on filing reports all the time, but can generally take care of that before the deadline. A company with a sub $1 stock price can do a reverse split where it combines shares and boosts the price. Now, if you want to know more about what happens in a reverse split, I'll link to a video at the end of this one and in the video description below. But if a company can't correct these problems, or if it just doesn't want to, it gets delisted and the shares stop trading on that exchange. Now hold up, nation, don't panic though, because you can still sell your shares after that delisting. And what happens is the stock starts trading on what's called the over-the-counter or the OTC market. And these are sometimes also called the pink sheets because back in the day, the quotes used to come out on those pink colored papers to distinguish them. There are actually some pros to being delisted, and we'll get to how this can be an opportunity for investors in a bit, but I also want to warn you about these OTC markets. It is so much easier to list your stocks on these that it attracts all kinds of scams. The reason a lot of these companies are delisted, that failure to file those timely annual reports, that's not a problem on these pink sheets because it's not a requirement. In fact, a lot of the pump and dump scams you hear about or the boiler room fantasies you see in movies, those are the pink sheet stocks. So if you're going to be investing in these OTC stocks or the ones that get delisted, you have got to be ready to do your homework. Look into those financial statements, do your analysis, and make sure these are legit companies. Now, while some of the companies that might start off in the OTC markets, ones that get delisted from an exchange end up there as well, and it's not all bad news. The pros of being delisted are millions of dollars in savings on reporting costs. The lack of reporting requirements on that OTC market means a company doesn't need to staff an investors relations department. It doesn't need to pay expensive auditors and can ultimately use that money to grow or to return it to shareholders. Another potential upside here is that management can focus on the long-term growth of the company instead of constantly trying to make investors happy on those quarterly results. You might not see it flipping through CNBC, but management spends a ton of time making decisions that might really only benefit short-term earnings to make those quarterlies look better, but that might not be the best long term for the company. Now, of course, there's also a downside and a reason most companies want to be listed on these exchanges. And millions of investors buy and sell shares on those exchanges, and that means a ready source of funding for any company that needs to issue more shares. Besides that source of funding, though, borrowing costs might also go down when banks see that you've got that listing. Beyond all this, just being listed, it makes publicity easier and is something management can kind of brag about. Now, I can hear all of you asking, so what happens to my stock after it gets delisted? And the answer is absolutely nothing. Technically nothing happens to your stock or the company when its shares are delisted. The stock is going to stop trading on that major exchange, but the next day it's going to open up for trading on the OTC exchange. When that happens, the ticker symbol will usually change. For example, shares of Luckin Coffee were ticker symbol LK on the Nasdaq, but then changed to LKNCY on the OTC market. This is just because the major exchanges use a 2 or 3 letter ticker symbol, while the OTC market has 5-letter tickers. Now that's it. The company is still the same. There are still the same number of shares available, and the fundamentals of the investment are still the same. Now understand that the share price might take a hit on the lead up to delisting, and I'm going to show you an example of this in a bit. Some investors may not be able to hold OTC listed shares, and some just don't want to go there, so they're going to be selling out a few days before the shares get delisted. Besides the potential benefits for the company in delisting, it's not as bad for investors as most people think. In fact, it might actually be a buying opportunity. Your shares of Luckin Coffee plunged 54% on the day before it was delisted from the Nasdaq and opened even lower at $1.09 per share on the OTC market. Within 2 days, though, the stock had doubled to over $2 each. Now, the reason is you get that huge rush of investors selling out their shares when the company gets that delisting notice and then when it goes to the OTC market. Some investors, like those institutionals, they're prohibited from holding those OTC stocks in their portfolio, and a lot of regular investors just have that misconception about a delisted stock. So you get this huge wave of sellers and the stock price tanks. But if it's still a solid company, and that's where you have to do your research on this, the shares can rebound when they start trading on those fundamentals again. Better yet, it is possible for shares to get relisted on an exchange. All the company has to do is meet those listing requirements, make the filings, and they're back. And when that happens, you can get the opposite of the sell-off, so that rush of buyers in the stock and a huge upside. Click on the video to the right for everything you need to know about a reverse stock split. What happens and what does it mean for your money? Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.